Good morning, traders. It is Wednesday, March the 6th. Taking a look at the charts, we've got the SP 500. You can see this range that we're looking to potentially take advantage of, which is this previous resistance high from these previous highs and down here by these lows. That would give us a fairly significant correction in the market. From there, we see what type of price action, volume, sentiment, everything comes into play. If we get some type of reversal to get potentially long for a push up, to try to get near these highs that we saw back in time before the market maybe rolls over again. We'll have to take it one step at a time. Obviously, the markets are dynamic. They change day after day, and you really do have to regroup, reanalyze how things are moving. Now, this is the SP 500. We poked up to this resistance area. Some big sellers stepped in. We're kind of floundering down here. We'll see if we start to get this breakdown. We're anticipating a pullback. The question is, how far of a pullback will we get? Will it be the halfway mark or all the way down to the lower end of this range or even beyond? So we are looking for continued volatility to slowly kind of hold its ground, bump around, and for this to start to overflow and sell off and create a spike, a much larger spike in the VIX than what we've seen already. If we take a look at the VIX, it doesn't look like much, but there was a pretty good VIX here, about 12% pop in the VIX a couple days ago. This candle high here. It's faded back down, but if we take a look over at, let's take a look at the tech sector. We are net short the tech sector, and with any luck here, we're going to start to see this roll over and pick up speed. If we look at some of the big brand names, Amazon, let's just zoom out a bit here. It's pretty far from getting close to its previous highs. If we look at Facebook, it's again way off its highs. Obviously, huge gap here. Earnings, it is clawing its way back, but again, far from its highs. If we look at Apple, Apple floundering in a very big way, and all these tech stocks they're really kind of underperforming. And where Apple moves, if Apple is underperforming this much, when the next wave of selling kicks in, we could see Apple really pull back and come down to test these lows, and that will really move the tech sector. It'll move the overall broad market. So the big techs are struggling to some extent. I feel as though they're on the verge of a reversal, which will definitely put pressure on the tech sector, which is what we are net short, and it'll pull the rest of the market down with it. Now, if we look at a couple other areas here, we look at utilities. Utilities have been on a much steeper climb than the rest of the market because there's a lot of fear in the market. Money is moving into these safe havens. It's starting to show a little bit of volatility. It's popped up to a nominal new high, pulled back. It's pushing back up to some nominal new highs. It is acting as a very good safe haven at this point, but when I think the stock market does roll over and sell off, I think we are going to see everything sell off like what we saw in December, where we saw utilities hold up really well, but when mass fear hit the market, everybody unloaded all the shares they had, doesn't matter what sector they were, and we saw this huge flush down. The first move down, intraday consolidation and rally, and then it sold down for the second half of the move. I think we could see this do the same thing. Looking over at precious metals, gold continuing to struggle this morning. It trading again down on the day. It looks like miners and gold are set to trade relatively flat at the open, but again, we got a lot of downward bias in the market, a lot of downward momentum. I think we could see potentially a consolidation here a little longer, maybe a little bounce back up to this 1300, but overall it feels and looks like the market could just continue to give way and sell down to this 1240 area, which would be more or less a measured move. This would be the first half, little consolidation here. The second half would be down here. It's also a significant pivot low. It's a significant pivot high, another significant pivot high, and a significant pivot low. So that will act as a pretty key support zone to trade. If it sells off and flushes down there, it'll be an opportunity, much like our natural gas, where price sells very quickly into a very significant support zone. We should see at least a bounce off that, a tradable bounce, and it could be a more significant bottom looking forward several weeks after that. Taking a look over at Bitcoin, you can see here floundering, still stuck underneath this falling trend line, but you can see there's life in the price action. It is on the verge of a pop and a breakout, and it has yet to do so. We'll see if it starts to break and run. The next target after this, I think, will be around the 5,000 mark. There will be a couple little levels on the way up. I think this 4250 area will act as a very significant resistance area, the first real level. It is this previous pivot high over here. It's also right through a huge volume area through here, pivot high, and a consolidation. So after that level, I think it could really unwind it and really take off to the 5,000 mark. So we're going to keep our eye on this for a play. There is a way to play this, the GBTC ETF or fund. You can see it up here, GBTC. It doesn't quite move exactly the same as Bitcoin, but overall it moves similar and allows you to take advantage of Bitcoin without having to trade the futures or the cryptocurrency, because they are a little tougher to trade and carry, I think, a lot more risk just because they're harder to move in and out and highly leveraged. Looking over at energies real quick, natural gas down 0.4%. We caught this drop, the bounce, and now we're just letting it do its thing until we get another setup that we like. Crude oil down almost 1% this morning, continuing to ping pong around between these levels. Overall, if it can break out to the upside, then we are headed to, we are going to be headed to around the 62, 61.75, somewhere up into this area. That would be the next kind of measured move in price. If we break to the downside, we are most likely coming right back down into this 52 area, where it'll fade back down and could continue to chop around and in this larger range. Last but not least, let's take a quick look at bonds. Bonds continue to kind of flounder. They did break down. They're consolidating here. Not a whole lot going on with bonds at this point. If we can see, there has been a lot of volume moving out of bonds. I think we could see bonds start to move back up as the stock market starts to sell off. This kind of feels like a little bit of a shakeout where the market pushed down, breaking this previous low over here, which flushes the market. And that's usually when you see something move higher, is when everyone's just been stopped out from a very clear, significant pivot low in the past. So we'll see if we get some traction, and if the stock market starts to top out here, bonds should continue to rally and move back up to the upper end of this range, or potentially to test these highs that we saw back in January. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.